All right, hey guys, Sam here with you. It's Friday afternoon, and by request, we actually polled our Twitter followers today, looking for requests for what they'd like to see. And after Bitcoin, number one was Ripple to Bitcoin. So I've got it up here. Now, we've looked at this a couple of times. It's been through the whole sell-off here. So I've got a 4-hour here. There's more history here. I'm not trying to connect these two. And again, we've been through this a couple of times, but likely this is a WXY, even though, yeah, for Elliott purists, that's shallow for an X wave. But I think, regardless of how you count this, I think we can all agree that we have a 5-wave structure that comes down here. So we complete a pattern here, regardless of how you count this. From this pivot, we get a pretty clear 5 coming down that's completing something. Now, that's usually not enough, right? So that's completing the pattern. I'm going to need more than just that, right? I always try and teach you guys about confluence, and I like to look for 3 or more, 2 at a minimum. So one thing I thought I would just show you a couple things, since we were kind of focusing on some of the market geometry here in the Bitcoin video, as well as I'm going to show you some things here, right, as well. So I thought that one of the things you're always wondering, right? So why does it stop here? Why? There's always a reason, and if you can't find it, you just haven't looked hard yet. You haven't looked hard enough, or you don't know how to look for it. Well, here's something that you might start using here. Now, I describe this as the wolf range. So if I do it here for you, we're just ranging the market in those 2 white lines. Then we're just splitting. So the greens, that's 100% of the range, 200%. And in purple, that's about as far as you'll want to take these, is 300%, and then just dividing those in half with the blue lines, right? So the key now, that was is the initial range. So if I just grab that high and I go down to the first swing low that I get, the first time before I get a retracement, what do we get? Right, it's called range expansion. So here's the range. Here is 100% of that range, and it's literally to the tick. So we have the range here. Now, interestingly, and this is much of Gann's teaching here, the idea is that that the market will move to and from these levels harmonically. So it'll go to one, bounce, go to the other, bounce, go to the other, bounce. Note where we are right now. So if we look at the range here, this range, let me see if I can get it this way. So we established the initial range. Now we have the secondary range, the lower range. We're exactly 50% of the range. All right, it's kind of interesting. Right? So I would encourage you to have that in your arsenal, to be looking for range expansion in the market. It's very, very common. And if you can't find an alternate price projection, or the fib retracement, the targets aren't hitting it, get to I call it the wolf range, because that's how it was taught to me. But the guy who taught it to me, I've just tagged it with that moniker since then. So I call it the wolf range, but you could just call it the range expansion, call it here. I think wolf range is more fun. So here we go. So here we're sitting at the 50. All right. So now, with that established, so I have the combination. Now I have enough confluence here. I have a completed pattern. I end with a 5-wave structure here. So I'm completing something down here. I get a perfect tag of the initial range of the market. I've got a technical pivot. How about we leave it at that? I feel fairly confident that I've got a technical pivot down here. So, well, I'll spare you all this. Let's just focus on what I'm sure people are interested in, is what's happening over here on the hard red edge of the market. All right, so we've had this ramp and sell off, right? So I don't think we need to dig through this. This is some sort of impulsive structure, and we've had the straight shot up, and then we've had the nice ABC to correct it. Right? Not uncommon. So same idea here. We could come down here looking for range expansion. That's the initial range of the market here. I might look here a little further. So I've got a couple of choices here, but this is the dominant. So I go, here's my initial range. Here's 50% of that range. And I'm kind of in between here. So I like to check them all. I'm looking for those dominants here. Now I'm on a 4-hour chart, so I might dig a little bit lower, but this looks pretty good right here. And then I've got a decent range. I've come back and tested 50% of it. Now essentially you could do the same thing here. You note here, if I go from here to here, all right, I'm splitting that range. And I mean, not exactly, but I'm pretty darn close. I just tagged the 50. So again, just splitting this range. Here's 50%. So it's just a convenient way to, I like to use it as sort of a quick, to see if I can range the market, because I'm not going to miss any 50s. Right? So, or any hundreds if I get the range expansion. So with that established, I've got a contender. Now, that's not to say that I wouldn't look in addition to just traditional measured move. So if I just grab a measured move on here, well, here's the 50. We're a little shy of that target. So that's where it can be useful if we're not making targets. Was it here? You kind of look and say, well, this would have hit. So here's the B going to the 50. Now here we are to algo target. So it's just another tool to use, so that if you're looking, is it there? Is it here? Is it here? What about the wolf? What about the wolf range? Well, here it looks like you didn't need it, although technically you'd pull to this pivot here and you'd come up a little short on the assumption here. So this is kind of a good example here of where we never know until we see the reaction. We don't know who's behind it, what's behind it. We just know that this is an algorithm that leaves a footprint. That's all we know. That's all we need. So once we can find it, we know what it's likely to do next. So here, so you'd have the conundrum of, well, let's see. All right, here's my first swing. Here's my retrace. So I come just shy of the 50, but I don't make target. So it becomes the question: do you use the next pivot, or do you stay with the initial swing before we retrace and come to this 50? I know that's probably harder for you to see it. Let me open that up a little bit. So that's the question, right? Is this 50 enough? And do I leave it here? Do I leave it right there, or do I bring it down? Like, which one do I use, right? So we would defer to this one because of the reaction, because we get to target and we get a reaction. So again, it brings me to this as a high probability for a technical pivot. So with that established now, I can make a fairly strong case that whatever this was, it was impulsive, and this was the correction. So impulse, where we trend, right? And we can dig 5 out of it. You can see 1, 2, 3, 4, likely the extension in the 5. So I have something impulsive here, and I've corrected it with a nice, clear, clean. Well, the A is not as perfect as you might like it, but I've got a little A, B, C into my B. I go right to a 50. I go right to an algo target, and I can dig a 5 wave coming out of that. All right, great. So simple stuff. Impulse correction. Now, getting a little trickier here. So what do we do with this? Well, let's go down to a 1 hour here and see if we can make sense of that. I'm going to have to scrunch up a little bit. Well, maybe too much. So bear with me. Let me just open this up here so it's a little easier for you guys to see it. All right, so we've got a reasonable case. So if we make the assumption that whatever that impulse was here was a 1 wave, and with this ABC, we've gone beyond the 65, so we've made a deep retracement, which would imply a second, since we're now moving away from it. So if that's my 2, then I'm looking for some sort of an impulsive structure here to get me out of this. Let me get this down here, to get me out of the hole down here. All right, well, can I do it? Do I have the ingredients? Well, I've got a 5 wave structure here. It's that this is going to create, it's not an abnormality. It's just, it's shallow for a second, but I do get this leading diagonal coming off of this low. So I've got my 1, 2, 3, 4. Now, it's damn near call that a double top. As I've shown before, in a diagonal like that, we're looking for a relationship between the start of the 1 wave and the pivot of the 3rd. Well, we get the 30, it's not to the tick, and note we don't get to target, right? We don't get there until here. Here we get this little reaction. So it suggests that likely this is completing the 1 wave here. Now here's the problem, right? So if we look at the depth of the retracement, for the potential 2 wave, we're only making the 38. Again, it's not unheard of. It's not that it doesn't happen. It's just lower probability. It happens less frequently than a retrace to the 50, 618, 786. That's the prime zone. That's the probability zone for my second wave. Well, note what happens up here. So if this is 1, 2, well, my 3, I'm at exactly negative 100%. So I have a real contender here, excuse me, for a 3rd. So if I do it with the alternate price projection, now it's not going to be right on the 618 because we're shallow in the 2. So, but I certainly am, here's my 100. Now, I'm not to the 1618 because the depth of the retracement, had I gone to the 618, right, that it's exact, right? So it's minus 100, here's the 618, 1618, you get the idea. Had it been at the 50, now we're not quite there. But since we're shallow here, we're actually closer to the 1272. Right, the square root of 1618. But that's a technical pivot. So I can lean into that and say, well, it's not perfect with the 2, but I think I've got something technical here. At the very least, I have pattern. I have a completed leading diagonal to give me a 1 wave. I have a shallow 2, right? That can just be indicative of market strength, and I have the requirements for a 3rd wave here. Now, you're getting a little dicey here on this 4. It's possible we're not done here yet, but what's important to this here now is that we can't overlap this 1, because if this is a 1-2, this has got to be an impulse. Right? So if we're looking for to come out of this, remember, if this is the 2 wave of the larger degree, well, I've got a 1 wave that's in. Here's my 2, so I need this to be impulsive. Oh, I suppose there's a way we could work around that. This could end up being a larger diagonal. But right now, for the sake of this count, it would be preferred that we stay above this pivot, we stay with an impulsive structure, and that if this is going to retrace, that we are going to be somewhat technical here. Now, we're deep for a 4. There's no question about it. Now, note, we go right into the Vegas wave. We're deep for a 4, but we don't threaten the 1. So is that done yet, or is there one more push down? That would start to change the complexity and the symmetry of the count, because note the depth of the 4 relative to the 2. Again, it's not that we don't see it, but you certainly would not want that pivot to be challenged again. If we've moved off of it, so hopefully within the 5, that's just the 1-2 of the 5, and even that is somewhat suspect here because we didn't get much distance off of this pivot to call that a 1. So if you think about it, if that were going to be the 1, and we don't know that it's done, and we're going to go 3, 4, right? We're going to have a kicker somewhere here is going to have an extension. It's going to need to have an extension if we're going to get even to just to that algo target. So keep that in mind. This may not be done here. We could just be getting started. But of course, there's always the probability that we're just going to roll over. This fails and we go down, and this ends up being just an A, B, C, and then down we go. So you can't ignore that. It's if you're long the market or you're bullish the market, this is a good sign. But we can't just turn a blind eye to the fact that there's likely, if I go swing high to swing low. Well, what did we run into? Here's the 50 from the dominant swing high to the swing low. We ran into the 50. Now, that doesn't mean, all right, just because it's there doesn't mean we can't get through and get to target. But to really create the trend change, we've got to get on the other side of that 65. Then we've got clear sky above us. All right, so hopefully now this is the pivot and we start to head towards that target and at least break the 50. Well, so given the fact that we have these fairly cleanly established swings, we're going to start looking for a relationship between those. So of course, first thing we're going to do is look for some market geometry. Let's get this. I guess we can get that off of there. So let's start with just the standard median line. So I'm going to go up for my 1. Now possible, well, let's see. I'm going to change that here. I'm going to start with original. So we'll start with original and see what that looks like. So here's the 1, 2. So is that, let me reset here. So if we're going to go up, right, does this look like this is still framing the market? Well, it certainly is possible. So let me go to a 2-hour. It's possible, as those are the dominant swings, that we could still be heading towards that median line. There's nothing that says, well, let me rephrase. As long as that pivot holds, unless we're moving too far past it, where we'd redraw from different pivots, it could take a year to get up there. But that 80% still holds as long as this pivot doesn't break. As long as we stay above this pivot. Now, if we get out here where it's taken too much time, that's when we go to a modifier. So if it's going to, so let's do that. So let's just, on the assumption that we have the 1 wave in and we've got the 2 wave in. Well, here's our high probability zone for the 3rd. We know this, right? 1618, 175, highest probability zone for the 3rd. Well, if I look at where I am, right, we're not, right, so here's the last pivot. So we're running out of time, right? It's again, it could happen. I've seen it where it's taken a hell of a long time to get there, but likely if we start pushing over here, we're going to redraw, we're going to go to a modifier. So let me just grab that, and just for the sake of demonstrating it, let's say we look at the 2, the shift for our third. So now, well, wait a minute, I don't have enough on there. Well, of course you could also look at the modified shift. That's going to be a little steeper. But likely what you're going to need to do is put on the 200, it could be the 2 or the 300 to allow for that to get up there. So here, potentially now, as we head up here, we get towards that upper parallel. Again, we don't know. We have the time element because the market is framing itself. We're using the market swings, not something we've come up with. We're looking here saying, well, where could we? Could we here, right? So 80% still holds here, even with a modifier. Eventually, right? So here would be 100%. Now we have a contender for a third. We get up to here. So let me do it this way so you can see that. So let me take those off. Let's just go. Let's keep the 2 off and the 3 off, and we'll just go with the 1.5. Right? So then we can kind of look at how, if it were to get there more quickly, we'd have the 1.5 to support it. If we were going to go that direction, and this ends up completing and becomes our one wave, perhaps that's the one wave of the larger degree, and we end up getting there something along these lines. We get up here, we get our 2, then we get our median line 4, 5. Again, I'm just drawing it to demonstrate here. Let me get that off of here now. So again, this doesn't mean if we get to this, it doesn't mean it's over. No, it could be, but that the idea is if we're going to carry on with this pattern, we'd be looking for perhaps a reaction at the median line, but then the continuation of that trend, and it might end up being something like that. So the 3 could end up being over here, right? Again, just because this is here doesn't mean that that's where we're going. So we could easily, this could be 1, 2, 1, 2, 3, 4, 5. Lots of different ways this can resolve, but you want to keep these on here because that's excellent framing of the market, and the market does it for you, right? You just have to apply the tool. So let's consider that possibility here. Now, with that established, we still don't know if this resolves or not. We just have we have the potential for it. So if we go back to, well, let me go back down to a 60-minute. Let's try even the 30-minute. Let's see how we look there. So key levels here, of course, is this wave potential. It's nothing more than that, just the potential wave 1. Here's the 2. So you could, so just right off the bat, there's a number of things we could do. We could just put a nice tight channel on this. Right, we know that's very similar to in this particular case. So we'd be looking at potentially a modified shift, and that in a channel are identical. So we have the potential now for this to get up here. Let's see if we can range the market coming the other direction. So if I go up to that first range here, I'm going to, well, that's kind of interesting. Let me get this. So if I just take the initial range of the market, now I'm going to switch to my wolf range. And I'm going to just start checking, right? So here's the first one. Here's the 50. We get a reaction here at the 100. I just start looking. Where do I have a reaction? Where do I get a reaction? If that's the 1, get that right on there. On that. Look at that. Okay, so if this is a completed one wave and I take that range of that one wave, well, here's exactly 100% of it as we tag the channel. So the channel is it's essentially the same idea. We're identifying these 2 pivots and then expanding up. So here's exactly 100% of that range. So I start to feel better about this 3 and potentially this 4. So I've got the ingredients here now of a potential trade. So this is starting to look better. So I feel good about this pivot here as the 3. Now, can we go from this to here? Any of these are valid targets. So if this is going to hold, if this is going to hold, maybe we get up to the minus 150. That would certainly give us nice symmetry in that. Right, so if we go down all the way, let's go 15 minutes and look into this 4. How do we look here? Well, it's possible, right? We've got a potential. We could have. I don't love that. Now, let's see here. If this comes down, let's get this down here. It looks like you might Well, this is a deeper retracement, so even at the 15-minute, we don't this. It's not great. Here, let's channel it this way as well, so we get multiple channels on this. The worst I've ever seen. We have a contender here that we've got it this way, but this doesn't look like it's complete. So it looks like you might have 1, 2. Well, I don't think we can complete it. Let's just check it. So if this is the 1 and this is the 2, you'd have to get the 3 here. So you'd have to end that like this: 1, 2, 3, 4, 5. Or it's maybe a stretch. It's not ideal. Right, I recognize that. Maybe you can make that case. Right, the other alternate is that we've come up here. This 5 has one more leg to go. All right, so here's, let's get some of this off of here so you can see it. So this one wave here, bear with me. Let's get that degree down so we can see it. Okay, so this one wave here, do you see that? It's just barely been overlapped. Just barely. Few ticks interestingly to get right and tag that 50. So if this has got one more kick down, then I'd reframe this like that. Oh, that's not bad, right on that 3. So if this has got one more push down here to complete in 5, this would be a reasonable target. And that's back to remember the range we established, right? So that will be natural support, prior resistance, potentially offering the support here. So that, you'd not want this to be overlapped. So it'd be interesting if it's going to roll over. If we're going to get down pressure over the weekend, we're going to come down here and test this prior resistance here. Is that going to hold as support? Well, it's rather important, because if it holds and we don't overlap, then we have the ingredients for our impulse. If it overlaps, then we have the potential for a diagonal, and we've got to rethink the count. So let me pull back out to let's go to 30 and get a little more structure on this. So the 2 continues to be somewhat problematic because of the shallowness, particularly if we're looking at a diagonal. So the alternate is that we'd have a shallow B, and now we've completed up here the C wave here, and that we will not have this expansion. We've just had an ABC, and then we're just in the process of starting the 1 wave down before we start heading lower again. So you've got some technical pivots here that are going to be tells. That's always, if we can't get the trade sitting here setting up right now as we look at it. Whoops. Hang on a second. Where did I go? Let's see if I can go back one. Shit, what did I do? Oh, let's see. Oh, you know what? I'm going to have to bring it in over here. All right, so I'm changing exchanges here. So I was just doing a little test running here, so I don't know what I did, but I'm almost done here. So let's see how this wraps up here. We've got the tells now. If we get this 1 wave to hold, and so here it is without that labeling. As long as that holds, we have those ingredients here for this contender to be a leading an impulse into a 1, 2, 3 down. We come for the 4. As long as that holds, we've got the chance for this to go up and complete and give us that impulsive structure off of this pivot here to get us started on potentially now something meaningful. So we may be able to give this a 1, 2, 3, 4, and 5 going up there. All right, so that's about all I can add right there. So hopefully you pick up a little, maybe some insight into some other tools that you can use and some other ways to approach searching for that confluence. All right, guys, so with that, I'll call it a wrap, and we'll be back to you guys on Monday. Have a good weekend.